So let's talk about mining disclosure. I do work at a mining company covering a lot of this information. So take everything I say with a little bit of salt here. Marathon came in with lower numbers than expected. Marathon Digital is one of the largest miners in the North American space. They're huge on the stock market. They have a lot of hash rate under management, which is basically like how much Bitcoin they can mine per year. And they're frequently within headlines, whether it be CoinDesk, Bloomberg, or elsewhere. This month, we saw they put out some new figures showing that they actually had a dip in Bitcoin production by about 31%, over month rather. And that did not line up with some of the other production figures we saw from different public miners who basically continued steady along with like their previous production levels. So why does this matter? Well, if you're looking at the bigger Bitcoin narrative, we saw a few things pop out in 2021. Obviously, Bitcoin's price was a big thing. Obviously, people putting Bitcoin on their balance sheet for their corporations is huge. The El Salvador story was something. Another big storyline that a lot of people probably have not looked at is these public mining firms going public last year. Like they were all private, they went public, about 20 of them went public, and they are basically able to leverage all public money, all this capital and finance money that's on Wall Street to increase their production and size the companies. Now we're looking into a possible bearish scenario. Fed is increasing rates. Money's getting a little tighter. There's even talk of like lowering the Fed's assets under management. And that plays into a lot of people's fears about where the stock market is going. And that is therefore going to push these public miners who are really leveraging these capital markets to grow. So I'm expecting to see actually a lot of pain from public mining companies. We've seen that in the first quarter where a lot of these public mining companies bled out. Their stock prices underperformed Bitcoin quite a bit. We're talking like double-digit percentages. I think that could happen going to the rest of this year, even though on paper, a lot of these firms are actually doing quite well. They're adding more Bitcoin mining machines to racks. They're mining more Bitcoin, but they just are exposed to public markets, so it gets a little bit tough out there. George, can I throw it up to you for your take?
Yeah, the public markets angle to this is actually really important. I'm glad you brought that up. Startups tend to not go public for many reasons, but one of the reasons is that you don't have to say every quarter how much cash we have on our balance sheet. This is how much money we made each quarter or whatever. And the trials and tribulations that a startup has kind of get swept under the rug, and it's like a 10-year process of becoming a big good company. For better or worse, these mining companies are sort of like startups in a way, and they're really new companies. And I look at all these mining companies and I think, how financially solvent are these public mining companies really? Like how much cash, how much runway do they have on their balance sheet? It's a little bit finicky right now. And there are all these, supply chain issues, sourcing issues, Bitcoin's price issue. I think I might be saying something wrong here, but hash price issues, it's really interesting to me too, that Marathon is continuing to hold while Riot, another competitor of theirs, announced that they sold Bitcoin. So I think it's a tough business being a miner in general, and these companies being public right now just doesn't do them justice. I think it would have probably been better for them to stay private. I tend to think most companies should stay private anyway, but that's just me. But earlier I saw Jen's hand, and I want to see if she has anything to say here.
Yeah, I have a question for you, Will, on George's favorite topic. So I know that Marathon Digital, when they moved to Montana, it was to achieve 100% carbon neutrality, right? And then this report says that their production was down 30% in April. And so maybe I've drawn a parallel where there is no parallel to be drawn, but is this a trade-off we're going to see as mining companies start to focus more on climate concerns? Are we going to see production drop?
No, that's actually a really, really great point. So what we saw here with Marathon is they had a coal plant in Montana that they were using to mine Bitcoin with. They basically like resurrected it from the dead, employed a bunch of people, put some machines on a rack, and started sputtering along mining Bitcoin. And that pissed off a lot of ESG investors who are like, hey, we're not going to invest in you because you're using coal to mine Bitcoin. That's a bad public image. And to George's point, like if you choose to go along that route as a public company, you have to disclose a lot of these things. You need to disclose where your energy sources are oftentimes, just because investors are curious about this stuff. Like the SEC is asking for information more so about your finances, but investors want to know where your energy sources are coming from. They want to know who your labor is. They want to know what local jurisdictions you're operating in. And that is bad for your stock price if you're not acting favorably. So what we saw Marathon do is announce last month that they're moving away from this coal plant. They're moving machines down to Texas. Obviously, when you move machines, they're not online, they're offline, and you lose out on Bitcoin. So I think what we'll see is actually this will continue to happen, especially if we see what's happening in New York right now with this mining moratorium that might go into play. A lot of these public companies are going to have to face more headwinds with delays because ESG investors are not, they don't care. They don't care about like your production and whatnot. They want to see they're using green energy, and that's just the bottom line for a lot of them. Zach, I'll give it to you for last take on this, though.
Yeah, I mean, last take on these, I do wonder if there's going to be like the end of the product market fit of Bitcoin mining stocks being a way for traditional investors to access a little bit of the price upside of Bitcoin, right? Like typically these have been like Bitcoin proxy stocks, right? In lieu of a true spot Bitcoin ETF existing in the US market, people are trying to find ways that are like similar, like crypto light without having to deal with the crypto stuff. And I'm curious to see like how these age, right? I think there was this rush to get to the public markets last year because there were so few options for traditional investors to do that outside of, Coinbase back in April of 2021. So some of these people went public during a bull run, said, hey, we can access the public markets in a way that's going to be beneficial to us in the long term. I wonder if that thesis, if that value proposition will fade over time as other products hit the markets and more people will become comfortable just holding Bitcoin itself. So to me, that's sort of like the big picture thing that I like to keep track of here. But it is interesting to see all these people fighting in the court of public opinion, especially with ESG investors who aren't native to the crypto space. So interesting one to watch.